How's it going, guys? We got to talk about Charles Schwab and what's happening with one of the most popular brokers here in the US. And Charles Schwab isn't just a brokerage like Robinhood, right? They also have a huge banking sector, a massive investment sector, and also a really big real estate sector as well. I mean, they invest in real estate like crazy, but now it seems like they're laying off employees, downsizing offices, and even cutting back on some of the most expensive real estate in San Francisco. And we're also going to be talking a lot about what's happening with a lot of banks in the US. So this video is going to be pretty spicy. Strap up, because now Charles Schwab is laying off a lot of employees. In fact, they've laid off about 2,000 employees just in a few days. The stock is down 39% this year, and we're seeing some really scary stuff happening to Charles Schwab. And for the first time, you got one of the biggest companies laying off a massive set of numbers. And it's not just Charles Schwab, guys. You're also having actuaries being laid off, right? You also have some of the biggest companies like United Health. They're laying off workers. Health insurance is losing a lot of money. You got pharmaceutical companies struggling to have a positive cash flow and much more, right? All these things are really hurting these massive companies. Now Schwab is like, you know what? It's time to cut back on some downtown offices. And they've actually shut down their San Francisco office space. This was a little bit just a few months ago, but now they've officially left. They've also shut down other locations in California, even the small bank branches as well. We're also seeing Charles Schwab cutting back in some of the biggest US cities. This way, they said that they could save $500 million in terms of office space. Here's the thing. Traditionally, we've always thought that the companies cutting back on office space is going to be like tech companies. So at first, everyone's like, okay, financial companies will probably never move online. But now we're seeing a lot of these companies moving online. We're seeing people who used to work in offices and cubicles now work in home in pajamas. And everything's just being online on Zoom. And surprisingly, it's actually very, very efficient. And employees actually love this. You can move to a cheaper city, a cheaper area instead of commuting downtown. And now Schwab is like, you know what? Employees are pretty happy. Our customers are pretty happy with some of the performance, because Schwab's performance in the brokerage industry is not going down. They're doing pretty well in terms of service, and they actually got a lot of customers. But like I said before, with this high interest rate market, they're going to have to cut back on employees. So 2,000 got fired. And also they're cutting back on some of the most expensive real estate pieces. And saving $500 million is a lot of money. They could use that money to shore up other areas where they're taking big hits, like the commercial office sector. And they can also use this money to invest in other companies and just simply hoard the money for themselves, right? Or increase dividends, whatever it is. And so Schwab is making some pretty big moves. It seems like banking, we're seeing some stresses here and there, because we got a lot of banks, right? 4 biggest US banks lose $52 billion in market value. This was 8 months ago during one of the biggest collapses in the banking history, right? Almost like an '08 situation. You got Silicon Valley Bank and several others like First Republic, all taking a massive loss. Some even went bankrupt. And now you have small regional banks to this day. Look at the stock price. The market cap has not recovered. Same thing with like Bank of America, for example. Like the market cap is right back down to less than $30 a share. So a lot of these banks are taking heavy losses here. And banks are reporting a lot of losses in the commercial real estate sector, and there's a lot more pain to come. This is why you got big investors like Warren Buffett, Berkshire Hathaway, not buying any regional banks when like 30 jets landed in Omaha to meet with them so he could buy some small regional bank stocks. He's refusing to buy small regional bank stocks because of commercial real estate loans. And I kind of see what's going on with Schwab, right? They're actually selling a lot of their commercial real estate properties. They're cutting back on downtown office space. They know that commercial office space is pretty doo-doo nowadays. You got vacancies in San Francisco at like 35-40%. Manhattan vacancies are rising up despite being the #1 financial capital in the world. Seattle vacancies are headed towards 20%. Chicago is pretty bad. You got Boeing moving out to some areas as well. Startups leaving. It's just like a pretty big bloodbath, in my opinion. And many of these commercial offices are pretty worthless. Nobody really wants to buy them. And if you look at some of the prices per square foot, like this one right here, this is pretty good, high-end building, Union Square. This is like centralized downtown San Francisco, less than $50 per square feet per year. This would have easily fetched $80, $90, even $100 per square feet per year. If you look at some of the more expensive ones, the ones are near like the Salesforce Tower in San Francisco, for example, you got some offices are like $35 a square feet, 24 24 right here, and the higher end ones are like 40, 45. Like, I'm telling you, back like 2018, 2019, you couldn't find anything under like $50 per square feet per year. Now you see a lot of options, and most of them are going for like 120, 130, like the really high end ones. And on average, I was seeing like $70, $80 per square feet per year for some of these offices, and prices have truly fallen down. So banks are freaking out because a lot of small regional banks and even big guys and brokerages like Schwab have like a crap ton of investments in commercial real estate loans. Because during the pandemic, everyone bought commercial real estate loans because everyone was expecting workers to come back, but nobody came back. And this is like this really scary hole. I know people like to talk about how terrible residential real estate is, how it's like almost 8% interest rate for the 30-year mortgage. But seriously, though, commercial real estate loans are even scarier because this is going to be the collapse of banks and cities. And it's so bad that even Joe Biden has to say something. Joe Biden wants more people to start living in office spaces. And in my city, it's a very small suburban city with just a few skyscrapers. And I was pretty surprised that they actually converted one of the offices into a residential skyscraper. The prices were absolutely insanely high, but at least they're actually doing this, right? So when you have the government incentivizing construction companies to convert empty offices to residential, what do you get? A crap ton of residential, right? If you just go to San Francisco, for example, go to downtown, look at this. I could guarantee like over half of these buildings are like offices, not residential, right? If you go to some of these areas, like up here, some of the touristy areas, a lot of this commercial, a lot of this office, you would probably never see like residential buildings in some of these neighborhoods. Same thing in Manhattan, right? There's whole entire rows of skyscrapers that's strictly just offices. And if you convert some of these to offices, you're going to be having like tens of thousands of units coming in. And we already see, cities like Oakland, for example, experiencing a massive decline in rent, like 7.2% in just the past few months because of over construction. Now, add in the fact that you're going to be having offices being converted to apartments. Well, kiss the value of a real estate pieces goodbye. Rents are going to be dropping, Airbnb is going to go bust, and all sorts of crazy things. I mean, look at this, like 30-year mortgage hitting 8% for the first time since 2000. Absolutely crazy. And like I said before, Schwab isn't stupid. I think they're smelling a massive commercial office disaster. This is why they're canceling a lot of loans, right? If you want to get a commercial office loan right now, it's very difficult when you go with banks. Schwab is also noticing that commercial real estate is pretty doo-doo, and also just working from home is pretty nice. They're still making a lot of money, and they're saving much money, so they're going with the path of canceling a bunch of these massive skyscrapers. And it's not just Schwab doing it. You got Wells Fargo selling some of their buildings in San Francisco for a huge loss. They're just like, screw it, we're going to sell it for a loss, but we're going to save a lot of money in the next few decades. And we could be seeing a huge rise in remote work. Downtown cities can no longer be just offices, right? It's going to be filled with a lot of residential, which I'm cool with. I feel like a lot of downtowns in America are just super empty because nobody's actually living there. Some downtowns in America, like Cincinnati, for example, is like 80, 90% just offices, and it's always super empty on the weekends. But if it's just residential, I think we could have a really booming and bustling downtown. So we could be seeing some pretty big changes, but let's see what's going on. But the thing to take away from here is even Schwab is taking some pretty fat losses, and they're laying off employees. This is not good news.